Welcome back to Alberta Primetime. Will Washington block Alberta's $15 billion deal with China? A deal whose success or failure could change the dynamic of our oil patch. And the newest earnings. What's plaguing Alberta companies? We'll also assess aspirations to become debt-free. Our Monday Money panel brings in Jane Alm, an investment advisor with Angus Watt Advisory and National Bank Financial. Jim Yee is a financial educator and founder of retirehappy.ca. And Shafik Hirani, Senior Director with Investors Group Calgary. Good evening, everybody.
Hi, Jen.
Hi, Jen.
Hello.
Shafik, a U.S. senator is looking to block CNOOC's purchase of Calgary-based Nexen, saying China blocks Western investment there. Legitimate concern?
You know, yes. I mean, Charles Schumer is the name of the Democratic senator, and he's trying to block this deal on the grounds that it doesn't pass a security test in the States. And Nexen does 10% of their business in the States. They're listed on the New York Stock Exchange, and he's writing a letter to Tim Geithner this week about prohibiting this deal. And if it doesn't go through, you have to understand there's a $450 million breakup fee, and there's also allegations lately of insider trading, where one of the principals for the CNOOC was alleged insider trading on the deal before the stock purchase went through.
Right, some knowledge, a little bit of money making perhaps going on there. That's the allegation. The U.S. Securities and Exchange Commission is looking into the insider trading. Jane, is it significant? Because this deal is pretty important for Alberta's big industry.
Well, I think it's very significant because it affects consumer confidence, and consumers have, investor confidence has not been strong given a lot of things we've been through in the last 4 years. So anything that damages that investor confidence is not a good thing. So yes, they need to investigate it. They need to make sure of what happened, and they need to have clarity, and the rules are there to be enforced. As far as whether the U.S. actually blocks it, from what I'm understanding more of what Chuck Schumer has said is, he said, don't need to block it, but one of the conditions has to be that American companies are allowed to participate in the Chinese marketplace.
Well, and that would go for other companies too, including Canadian, right?
Exactly. It's basically, if you want to play in our playground, let us play in yours.
Jim, is it worthwhile for Albertans making personal finance decisions, investment decisions, RRSPs? Is it wise for them to pay a little bit of attention to these big stories and maybe some of the general economic trends? Or is this just all stuff for the business columnists?
Well, I think that there's interesting components to this. This is really interesting because it is unprecedented. But for the most part, for most investors, I don't think that they should pay attention to this stuff. I think it creates a lot of emotion, and people, history has shown that people tend to react to things in the wrong way. That's why you have professionals. That's why you hire financial advisors. That's why you hire money managers for the most part. Even if you have an index fund that has Nexen, as a component to it, will this really affect your long-term investment, portfolio? Will it really affect your day-to-day living? Will it really affect your retirement? Really, in the scheme of things, I'd say no.
Shafik, generally quarterly results for some pretty big Alberta employers, big companies in our province, a little bit problematic lately. What do you see there?
Yeah, this is a little worrisome. I mean, most of the quarterly results for the third quarter are generally down anyhow. But lately, because of the decline in oil over the first and second quarter, you're seeing a little bit of lower profitability. This should be a temporary thing, so you should expect 1 year over. There has been a reversion to the mean in oil and gas prices, so there have been a rise. It is a short-term blip. There might be some opportunities to take advantage of some of the oil and gas equities, but it is more short-term in our opinion.
And Jane, Europe holding a financial policy meeting Thursday. The president of the European Bank has said they'll do whatever it takes to keep Europe on its legs, to save the euro, save bankrupt governments. Jim, I have to say, when Europe falters, my RSP statement maybe doesn't look so good for that 3 or 6 months. And so people sometimes, the emotion is there, but they care about that news. What's happening with Europe Thursday? Does the head of that bank need to put his money where his mouth is?
Well, a lot of people will be looking to see whether there's concrete ideas, not just we're going to do this in 5 years or we're going to do this in 8 years, but what are they going to do? How are they going to do it? most importantly, how are they going to finance it? And is it in place in the next 3 or 4 or 5 months, or is it in place in a few years? Now remember, the one thing that's very different about Europe than North America is in the next couple of weeks, if they don't get something done now, nothing likely gets done much until September, because they basically go on 4 weeks of vacation time. And even the Italian government this afternoon, Mr. Monti, was trying to get through some of the austerity passed so that it's done and in place and accepted as confidence in his government before that summer break.
So people are watching these happenings, Europe, China. Jim, are the days, going back to the point of the average Albertan, what do we do with these news? You say rely on your financial advisor. Maybe they're not phoning. Maybe you're phoning them and you're not getting a call back. You do have to take a bit of your own responsibility, do you not?
You absolutely do, right? Nobody cares about your money more than you care about your own money. So you have to engage in your portfolio as much as you can. But the reality is, most of us are not wired this way. Most of us are not educated properly to do this kind of thing. I mean, we happen to watch this stuff, you know, on a regular basis, but not everyone has the time, the effort, the energy to do that kind of thing. So maybe the challenge is finding a good advisor, and that's a whole, you know, instead of looking for a great investment, maybe looking for a great advisor, somebody you trust in, somebody who will work with you, somebody who will call you from time to time. I think those are important qualities, absolutely.
Shafik, you work in Calgary. Are your clients picking up the phone?
Yeah, a lot of people across the world have gotten a little bit tiresome of the Europe deal, and remember, the markets are averaging 10 years of zero since 2008. So there's a lot of concern. I think you got two different schools of thought. One, people are thinking this is a wonderful opportunity and we should buy low, and the other group of people are saying that we shouldn't touch it. Right. And that goes back to Jim's point, where if you're going to work with a financial advisor, the key isn't whether you pick the right decision, because you got to be right twice. The key is establishing a more of a quantitative, written financial plan, and that's usually what helps people the most.
Next up, will you have more debt in 5 years or less? New polls show most Canadians and Albertans believe they'll be debt-free pretty quick. Realistic goal or wishful thinking? And how to get there anyway when the Monday Money Panel returns on Alberta Primetime. Welcome back to Alberta Primetime and the Monday Money Panel. A new survey by Leger Marketing Group for BMO Financial shows 54% of Canadians expect to be debt-free within 5 years. Nationally, 17 expect to be debt-free next year. In Alberta, 19%. And by 2017, 37% of Canadians, 33% of Albertans expect to be paid off. Jim, the same report also shows the average debt load in Canada, including mortgages, over $112,000 per person. So are our aspirations realistic?
Well, I think it's great news if it is, but I think it depends on who you talk to, really. I think if you talk to the younger, generation, they're going to say 5 years, you're crazy. How am I going to get paid off in 5 years? But I think if you're talking to the baby boomers, I think there may be some validity to the stats, because you think about the baby boomers have just turned 65, the youngest ones, and for the next 20 years, you're going to see a whole wave of retirees, and these people are in a hurry. They have to get their debt issues addressed, their financial issues addressed, and I see a lot of people in their highest discretionary years, the period just before retirement, putting massive amounts towards debt. So I think there is a group out there that is working hard.
Jane, people walk into your office and lay the cards on the table. What do you see? Is there as much taking on of debt as paying it off going on?
What I see is a lot of people taking on debt on hard assets, homes, recreational properties, not as much taking on of debt of credit cards. Home equity loans seem to be a little bit lower unless it's funding a recreational property or a rental property. Cars, there's a lot of the cars out there. Now, the challenge that we have with cars is that Canadians are financing them for longer terms. Over 50% of the car loans coming out are 6 years or longer. That's a long time. Your car may not last much longer than 10 years. You're paying that loan for 6 years. People need to take some time and understand what their total interest charge is by funding it over that long, and maybe scale back on what they actually want.
The monthly payments seem fine
the monthly
until you add it all up.
Until you add it all up. But it's also sometimes scaling back your want versus your need. You might want the Mercedes, but maybe you can afford the Kia. So you need to put that in perspective if you want to achieve that goal of being paid off in 5 years. I know a lot of younger people are very, very concerned about taking on too much debt. They don't want to be in a position that they have to work to make those payments.
And that's maybe contrary to some of the headlines. Is that an Alberta conservative culture?
It could be an Alberta conservative culture. It could be also an Alberta oil and gas culture, because most of these kids have learned from have watched their parents and have, you know, they're in their early 20s. They've heard their parents talk about the boom and the bust of Alberta, and please, please, please don't spend everything you earn because you don't know when that ends.
Shafik, is there good debt even on markets where a good mutual fund is maybe making 3% if you're very lucky? Define examples of taking on good debt to make money in today's reality.
Yeah, Jennifer, and I'm so glad you brought that up, because, you know, this whole idea that we should be paying off our mortgages and getting out of debt, it's not always the best strategy. As a matter of fact, a lot of affluent investors, what they do is they'll borrow money and they'll actually invest it. And you can invest it in stocks, you could invest it in mutual funds, you could invest it in principal guaranteed segregated funds, not just tangible hard assets like real estate. And if you do that, then the interest you pay, the cost of borrowing you pay, is a tax deduction. So it's a really wonderful strategy. Are Canadians and Albertans in too much debt? Yeah, the average Albertan's in $140,000 for the average Albertan, $120,000 for the average Canadian. But that's not necessarily a bad thing all the time.
You also have to figure in, though, that you've got to claim the income that you make on the investment down the road. So that's going to take a little chunk away from it, too, I suppose. But if you do well, it could work out for you. Jim, tell me more about, you mentioned people retiring and in a rush. What about Albertans retiring with debt? Are we seeing that? Is that even possible?
Definitely what I see is a trend where more and more people are retiring with debt. You know, in our retirement workshops 10, 15 years ago, we never got the question. People just assumed you had to be out of debt in order to retire. Nowadays, you know, increasingly more commonly we hear the question, can I retire with debt? You know, I haven't paid off my mortgage. Can I still retire? Is it okay to retire with debt? So we hear a lot of these kinds of questions, which is a very clear sign that more and more retirees are retiring with debt. Okay. Is that good or bad? Well, I think it's better to retire with less debt than more debt or no debt. So, but it can be done.
You talked about younger Albertans. Do they realize the cost of having children?
I would say largely most, not just younger Albertans, younger individuals don't have any idea of the cost of having children. They look at the cost potentially of the first year or 2 years. They may not even factor in the cost of daycare. Right. They certainly don't factor in the cost of sports.
I've got a goalie. I can talk to you all day long about that.
Exactly. Goalie, skier, whatever.
Thank you all for your time tonight. Jane Alma's an investment advisor with Angus Watt Advisory and National Bank Financial. Jim Yee is a financial educator and founder of RetireHappy.ca. And Shafik Hirani, Senior Director with Investors Group Calgary.